Welcome back, everyone, to TV5 News at 9. It is time now for Aging in Style with American Retirement Advisors. Joining us now is President and owner Joe Vitale. Joe, thank you so much for calling in this morning. How are you?
Doing great, Blake. Good morning. How are you? Happy New Year.
Yes, Happy New Year to you. We're doing good. Thank you for asking. Okay, before we dive in, though, don't forget to subscribe to Joe's newsletter, Financial Vitals, to get the latest market trends and financial news. Just grab your phone and scan the QR code in order to get the latest. All right, Joe, we're in a new year, so how did the market end in 2022, and what are the trends for 2023 as we move forward?
Yeah, not good. I mean, the market was down 8 to 32%, depending what you were in. So a lot of times you're seeing people are like, my goodness, how did this happen? Even if you were in bond portfolios, which is supposed to be safe, you're down 10 to 15. So it was a perfect storm with raising interest rates and inflation. The Fed was trying to curb it. So it was a little, for those in retirement or for those getting close to retirement who had a lot of money in the market, it was very concerning because now it's like, oh my gosh, am I going to be able to retire? Do I have to still work? So we're looking at 2023, what's going to happen? We're still going to see, you know, inflation is still up there. The Fed's going to keep raising interest rates is what it looks like. So what do we do? I mean, what are some good strategies? So we definitely want to be more defensive this year. We're very, a lot of our portfolios that are more defensive and stock portfolios, they've done pretty well, down very little last year as a result because of dividends and so forth. So you definitely want to be diversified. And we always talk about diversification and proper allocation, and even more so today with the volatile market, you have to make sure things are in the right position.
And for those who want to retire, how would a person who wants to do that replace their income in this type of market?
You definitely need somebody help with that. Now, you know, I mean, some people are like, oh, I live very little, I don't need much at all. That's great. But for a lot of people, you need to peel off income. Social Security is not going to do it. And their pensions are gone away for the most part. Some people still have them, which is great. But we want to look at pulling dividends. We want to make sure we got dividend portfolios. We've got a guaranteed or a very safe return that we can just peel off interest every year so that we don't lose principal. We also want to look at, there's a lot of nice strategies out there right now that different alternatives that allow a good rate of return and a good bond and a good yield. So there are some really good, but we also look at income replacement with replacing income on a guaranteed basis that replaces a pension or replicates a pension. So there's a lot of great strategies. What we do is we do a 30-year roadmap for our clients where we show you the next 30 years. This is how we're going to do it on a safe way and make sure we're covered all the way through.
Very good, Joe. And are there any safe investments to keep with inflation? As you said, you know, that's just going to continue this year. So how can you do that without risk of losing money?
Yeah, there are some that are doing really good. We're seeing 5 and 6% right now on a very safe return. So even though inflation's still a little bit higher than that, that's really helping keep up a little bit with it. There's also some other alternatives that are allowing, you know, 10 and 15% growth strategies with no risk. That's awesome. That's a great way to keep up with inflation without putting your money at risk. So there are definitely options. Not everybody can offer those, but as a fiduciary, as a holistic planner, we look at everything. We try to find every strategy for our clients.
And Joe, there was a big increase in Social Security for this year. So when should someone start to take out that income?
You know, we haven't talked about this in a while. I know we talk about looking at Social Security maximization strategy. When is the best time to file for Social Security? So with the 8.7% increase, yes, that's going to help keep up. A lot of those people in retirement already see that increase, so that will help. But we like to, you know, people say, oh, you got to wait till 67, you got to wait till 70. I'm going to file at 62. I like to know for sure when it is, and we show you that. So we'll do that maximization strategy. Some people already started filing for Social Security and then they go back to work. They're like, oh my gosh, I wish I never did. Remember, there's a 1-year do-over. So if you do file for Social Security and you're like, I wish I never did it, you can redo it within 1 year. So definitely give us a call if you have any questions on that. We can help, but we'll be glad to help you with those strategies as well.
Yeah, that's great. And I know you were saying that lots of options. So for people to take this year, what can you do, though, else to diversify your portfolio in order to outpace this inflation without any risk? Are there any options there?
There are. There's some that, you know, you look at some good blue chip stock portfolios that are paying good dividends that are more defensive. You know, people are still going to buy toothpaste. They're still going to buy toilet paper. They're still going to redo home. So there's a lot of great strategies to go on big company stocks that are not as speculative, that are just slow and steady wins the race.
Yeah.
They've been averaging great rates of return without a ton of risk, but let's be honest, there's still some risk in there, and you have to have that tolerance. But there's also very safe options that mitigate or just have no risk at all, that are getting that when the market does go up, you can get 10 to 15%. When it goes down, you get a zero. You never lose.
Yeah.
Great strategies. And a lot of people are starting to say, Joe, I'm sick and tired of the risk. I can't do it anymore. A lot of people can still stomach it, and it's okay. But for those who can't, that's okay too. There's great options for you.
So, Joe, it seems
just give us a call. We'll help with that.
Yeah, absolutely, of course. And your information's on our screen for our viewers.
Yeah.
So also, with this year, it sounds like we're not going to stop talking about inflation. So can you give us an update on that and how it will affect our retirement funds particularly?
Well, remember this word. Oh, inflation is transitory. Well, it's not transitory as we see right now. It's sticky. It's sticky. And the reason is the wage inflation is way up there. That's not coming down. Plus, the Fed the government just approved another $1.2 trillion spending bill. Mm-hmm. And when the government spends money and puts money in the economy, what does that do to inflation? It keeps it way up here. So the Federal Reserve is trying to raise interest rates to drive down inflation. The federal government's spending money, which is keeping it up here. And the Federal Reserve is raising interest rates. But what's going to happen is going to put us into a recession, which we're already starting to see. So we're already starting to see the housing. With inflation, we're starting to see the housing starting to go down a little bit. So we're starting to see some of that's dissipating, where the houses are coming down a little bit in price. In the cars, you're starting to see that come down a little bit. Mm-hmm. Not as much, but it's taking time because of the wage inflation is up there. But we're going to see interest rates continue to go up this year to try to curb inflation. And it's going to take time. It's going to be a tough year. I think in the right strategies, we could still be positive by the end of the year. Yeah. But you really got to be careful of how you do this and make sure you're in the right place. A lot of people like, Joe, I'm tired of doing this on my own. Would love to help you with that. But we got to make sure that you're taking advantage of everything out there.
All right, Joe, very helpful. Anything else you want to add before we go?
Stay the course. Now is not the time to panic and put the money in your pocket because, we're down considerably in the market. We could go down a little bit more, in all honesty. But I think we're going to see it come back once everything settles in. We're going to see it come back hopefully by the end of the year. But if you any help, we'd love to help you with it. We still have a lot of people going into retirement right now, checking out of work and just doing it, and we're helping them. Give you that peace of mind, that sleep at night insurance in retirement. Yeah. Give us a call. We'd love to help you with that.
Joe, appreciate your time this morning. Thank you.
You're very welcome. Good to see you again, Blake. Take care.
You too. Good to see you as well. All right, for the latest financial news and market updates, be sure to subscribe to Joe's newsletter, Financial Vitals. But of course, if you want more information on today's topic, just head on over to the Aging in Style page on our website at WNEM.com.